Hey, welcome to my channel. My name is Devin and thank you for joining me. Today we're going to be talking about NIO, stock ticker NIO. This is an EV company, a Chinese electrical vehicle startup. And most recently I read on Yahoo Finance that this could be the Tesla of China. That's a crazy praise. If you know anything about Tesla, Tesla is a 10x company, a generational company. That means it only comes around once a generation. So I'm going to break down NIO, what I think about it, if it's like Tesla, the pros and cons, and where the stock price is now, and if you should buy it. So stay tuned. I'm not advising you to buy or sell a particular stock. And this is just something, just food for thought, and hopefully help you formulate your own opinion. So the burning question is NIO gonna be the Tesla of China? And the answer is, drumroll please, no. Okay, well thank you for joining me. No, I'm kidding. So let's talk about what NIO is doing. So I wanna talk about the things that have gotten people really excited about NIO. And the first is that they have over 50 patents on battery swapping. So instead of like going out to charge your car at a charging station or charging at home, you simply drive up to one of these battery swap stations and it takes about 3.5 minutes to basically completely replace your battery and give you a brand new charge. And this is a game changer because Tesla is currently sitting at around about half hour to get your battery recharged. Well, this is only 3.5 minutes, so it's super convenient. And if you're not around an area where there is a swap station, they can actually send a vehicle out to you to charge your car 24 hours a day. So that's an amazing service. I mean, like if I was an electrical vehicle owner, in China especially, I definitely want that service. I mean, I even want it and I live in the state. So the next thing that's really exciting about NIO is that you can actually purchase the car without the battery. And this hugely reduces the barrier to entry for buying an electric vehicle. And not only that, but it actually increases their services revenue by leasing out the battery pack to you, and you pay on a per monthly basis. So now do you not only pay for battery charging, but now you're also paying on a monthly basis for a battery pack. So for me, that's definitely a win-win for both the consumer and for NIO. And I want to jump over to talk about the financial side of things. So most recently this year, NIO was able to avoid falling off the financial cliff by getting a huge injection from the local government, like I think it's called HEFI, whatever, in Anhui, China. And they injected about $1.42 billion into NIO. So recently the stock price of NIO jumped, and the reason has to do with the deliveries. So if we just look at Q2 of 2019, so if you look in quarter two, they only delivered 3,553 vehicles, whereas this year they delivered 10,331 vehicles, and that's a huge, almost 300% increase in the number of deliveries that they were able to produce. One other thing that they were able to achieve this year is that they achieved a positive margin. So now they have a 9.7% margin on every vehicle that they sell versus a negative 24.1% margin on every vehicle that they sell in Q2 of 2019. So that's a huge jump, and now they are no longer selling vehicles at a loss. However, NIO is still a very new company, and so now even though that NIO is able to achieve a positive margin of 9.7%, they're still a really new company, and their net loss from their operations in Q2 is about $166.5 million. And that may seem like a lot of money to be losing on a quarter, but if you compare that to the second quarter of 2019, they actually reduced their loss by 64.2%. So definitely they're making strides in achieving financial viability. So even though that NIO lost $166.5 million, which is again a lot of money, they were able to get a $1.42 billion investment from China, it's the local government. I think this city is Hefei, which is in Anhui, China. They received about $1.42 billion. So right now, the RMB is about a 7 to 1 to USD. So for every USD or for every dollar, there's about 7 Chinese dollars. So if we take a look at this number here, which is let's see, 10,726,099, and of course the numbers are reported in thousands. We just go ahead and divide that by 7 to put this in dollars, and we get about $1.5 billion that NIO still has on the books in terms of cash. And this is great news, because if they only lost $166 million, and we know that $1 billion is $1,000 million, so that means that they have enough money for the foreseeable future for the next 5 years without needing to raise capital. So there's no fear of bankruptcy, and we know that the Chinese government is definitely supporting NIO. So if they're strapped for cash, the Chinese government is probably willing to bail them out, given that they've given them so much money already. And that Anhui China also really, again, wants to be the electric vehicle hub of China, because they're also home to a company called JAC, which is a state-owned car manufacturer, which actually NIO manufactures their cars. So now that we know that NIO is very consumer friendly, their technology is exciting, they have a lot of money on the books, they're going to the moon, right? They're going to be the next Tesla, right? No. Let's talk about the drawbacks. So remember when I told you that NIO is not going to be the Tesla of China? Well, here's some of the reasons why. One, they're not vertically integrated like Tesla. So Tesla harvests their own lithium, builds their own cars, develops their own software, and sells their own cars out of their own showrooms and their website. So currently NIO develops their own software in-house, but they actually have to outsource their car production to a company called JAC Motors, which is a state-owned company owned by Anhui China, Anhui again. So you can see that they're really involved in the process. So the drawbacks to this is obviously they have less control over vehicle costs and perhaps also hardware software integration. And even though NIO actually does have enough money on the books to develop their own factory, they haven't said that they have any plans to. And perhaps the money that came from Anhui China also has constraints about maybe using JAC Motors. I don't know, I'm just speculating here. But they haven't said anything about developing their own factories, even though previously they really wanted to, but they just didn't have any money to do so. The next reason why NIO is not like Tesla is that currently they only operate in China, whereas Tesla operates in Europe, China, USA. So the market is a lot smaller for NIO. However, China is the biggest automobile consumer in the world right now. In the future, they have alluded to that they want to expand and become a global car company. However, that's not the case as of right now. So NIO is definitely heavily involved in artificial intelligence and vehicle software. However, they also alluded to that they are nowhere near as sophisticated as Tesla. And I got the feeling from when a reporter asked them, how's their summon feature, and they immediately said, no, we're nowhere near as sophisticated as Tesla. The application only allows you to pull in and pull out of a parking spot without a driver being in the vehicle. And the last and probably the most important reason why NIO is not the Tesla of China and can never be Tesla is because that they're a car company and Tesla is an energy company. They are completely different. I mean, Elon Musk proposed that one day that the energy side of the business can be even bigger than the car side of the business. And that's producing batteries for utility companies, the solar roof. That potentially has a bigger market than the actual car business that they're primarily focused on right now. That means that can still double in their market cap. So that if we are forward looking, we can say that, oh, you know what? Maybe in the next 10 years, Tesla's still cheap today. I mean, it's going to be worth maybe twice as much in 10 years. But sorry, I am too focused on Tesla. Let's focus on NIO. So NIO doesn't actually have any battery or solar power business as of to date. So they're simply a car business, but that doesn't mean that it's a bad business. And if we look at their current market cap, it's about $15.82 billion. What the market cap is just the price per stock times how many shares are outstanding. And right now, currently they're standing at about $15.82 billion. A good standing auto company should have a market cap of $30 to $50 billion in terms of market cap. So definitely at 15, I think that there is a lot of room to grow. And it does give me some confidence that the government is heavily invested. However, that is going to be a double-edged sword. And the reason is because of President Trump. Trump wants to delist companies that do not live up to the standards of US financial practices that US companies have to adhere to. But the other big thing is that they have to be not state controlled. And even though NIO isn't controlled by the state per se, the state does have a huge investment in NIO, and I don't know if that means that they have a say in which direction or what NIO does. So if they get delisted from the US, that's obviously really bad news. So that part of the news obviously is dragging down the stock price. And so if we jump into see stock price, NIO is holding this trend line currently and barely holding the 13-day moving average. So I think if you want to take a crack at the stock, given that if it can hold this 13-day moving average, I would get a starter position. And if moving forward, NIO falls below the 13-day moving average, then I would wait till it sees an uptrend again. And from the chart, we can see that it follows the 13-day moving average actually really well. And you can see that this uptrend from May until July kind of just rides this 13-day moving average. And also you can see that when it fell below the 13-day moving average, it kind of just rode it all the way down until it broke it again. And that's the best indicator, I think, for this stock. So I'm going to possibly buy a little bit more. It kind of depends on what happens on Monday morning to see if it can still hold this 13-day moving average or not. So this may be a position, this may be a place to get in, and it may not be. But you know, you don't want to buy the stock definitely at a inflated price, say like right here. You know, in July, you know, when it's going up to $15, $16, it's moving too far from the actual average. And generally, I like to use the 13-day moving average that tells me what the short-term trend is on a stock, and primarily because that's the average I like to look at, especially if I'm doing intraday trading, day trading. Given the drawbacks and the positives, I think that the risk to reward NIO being delisted, that's pretty much a 100% loss, versus the potential of NIO, which is, in my opinion, right now, you know, in 2 to 3 years, probably around $50 or $60. I think that the reward is there for the risk, and for that reason, I do have a position in NIO. So that's it for me. I hope you enjoyed the video, and hopefully that gave you some insight onto the company, if you should invest in it or not. Okay, so hit subscribe if you like what you saw, and if you want to see more, definitely comment below to tell me if there's something that you want to learn about or feature. And finally, my wife has a channel that she's starting. It's just going to be her daily routine, blogging. You can find her here. And yes, I know I'm blessed. She's beautiful. So yeah, thank you.